Hey guys, welcome back to Beyond Investing, the channel where we discuss sustainable and innovative investing. In this episode, we will be discussing the EV charging market. In addition to the market analysis, we'll be looking into a few companies in this segment. But first, I'd appreciate it if you give this video an early thumbs up by pressing the like button, and do consider to subscribe and share this content. As a start and to have the right mindset into this, I would like us to view a video with Tony Seba, a renowned thought leader. He's a Silicon Valley entrepreneur, educator, and author. He has many bestseller books, one of them being Clean Disruption of Energy and Transportation, How Silicon Valley Will Make Oil, Nuclear, Natural Gas, Coal, electrical utilities, and conventional cars obsolete by 2030. This clip is from 2019, a Robinhood investor convention, and it's very interesting to hear Tony setting the scene for the disruption of different industries. And he starts by explaining the disruption in the transportation industry in the beginning of the 1900s.
I am going to take you to the future of energy and transportation, but before I do that, I'm going to take you into the past. New York City, we are in New York, Easter Parade, 1900. We used horses as our main means of transportation for thousands of years. There is one car in this picture, one car in a sea of horses. Can anyone see the one car in that picture? There. One car. 13 years later, just 13 years in a sea of cars, can anyone see the one horse in that picture? That's all it took, 13 years for New York to go from all horse minus one to all cars. This is more than a century ago. This is the very definition of a technology disruption.
So very interesting to see how the car disrupted at that time the established transportation industry, which was the horse and carriage, and how effective disruption was. The time span was only 13 years in this example, but very, very effective. Now imagine with the technology development in our lifetime, the innovation speed that is happening right now, and the different business models that are being generated. What will be the adoption of EVs in our generation, right? My personal belief is with this rate of both technology, innovation, and business models that are being generated right now, the adoption of EVs will be extremely fast, and it will penetrate societies across the globe, right? Especially in China, in North America, and in Europe, and slowly it will come to other parts of the world. Let's look into a more recent example. In this case, it's the adoption of smartphones. In this case, you can see that the adoption of smartphones actually only took less than a decade, which is quite astonishing. And you can see this, right? As technology continues to develop at a much faster rate, as innovation continues to be generated at a much faster rate, and as different business models keeps developing, things tend to develop at a much faster rate and being adopted in a much faster rate. Let's look into a few consultants firms, how they view and analyze the adoption of EVs in the coming future. Here, for example, we have Deloitte. They believe that the EVs will only penetrate 35% until the year 2030. Another source is BCG. They also analyze the market for EVs, and they say that it's only going to penetrate 45 to 50% by the year 2030. And this is average across all the industry analysts out there. They generally put it around 35 to 45, maximum 50% penetration for EVs by the year 2030. And the reason why automotive industry analysts and industry people only puts it at 35 to 50% is because they're only having a inside view of this. There's nobody more or less taking an outside in view to the industry. And this is a common mistake done by industry analysts and industry people, that they keep taking these inside views and don't look from the outside in. And by that, they make grave mistakes. Here, let's look into Tony Seba again, where he gives an example of this, where AT&T actually asked McKinsey at that time in the 80s to look into what will the mobile phone penetration be by the year 2000. And listen to their response and listen to what actually happened.
So I'll take you to 1985, when the then largest telecom company on earth, then largest, hired McKinsey to answer one question. In 15 years, what's going to be the adoption of this new thing called the cell phone? 15-year projection, McKinsey. Their answer was 900,000. In the year 2000, AT&T, you're going to have 900,000 subscribers. The actual number was 109 million subscribers. This is not a small mistake, right? This is a factor of 120 times, right? My little dog could have done better and not charged as much, right? But you know, the thing is that it is usually experts and insiders and mainstream analysts who dismiss disruption opportunities. Really, really smart people with a lot of data or access to a lot of data. I mean, the cover of Forbes magazine in November 2007 said, "Can anyone stop Nokia?"
So I'm very confident that EVs will actually have a much higher penetration by the year 2030. I think above 80%. And I also believe we'll see different types of business models, such as robotaxis and mobility as a service, or mobility on demand subscriptions. And of course, all of this will generate a new type of growth, especially in the gig economy. And to do that, you'll need to build out the EV fleet. And to service the EV fleet in a sustainable way, you'll have to aggressively build out the infrastructure for charging. And if we look into the current EV charging market, according to Bloomberg, we just passed the first 1 million in August of this year. This number will increase dramatically. Different analysts puts it in different levels. You can see a compounded annual growth rates of around 35 to 50%, and different institutions are also analyzing how many charging units will be required in different regions. You can see here, for example, EU is expecting to reach almost 3 million charging units by the year 2030. US, the new president-elect Joe Biden promises to roll out 500 for US in the coming 2 years. And in China, we know that they have already started to roll out millions of these charging units to support their growing fleet. Let's play with the numbers. The current global car fleet is around 166 millions. And let's imagine by the year 2030, it will reach around 180 million. With a conservative adoption rates of EVs on around 40%, the EV car fleet would represent around 72 million. Now, the current EV car fleet is around 9 million, supported by a charging network of around 1 million. Now, extrapolating this to an EV fleet of 72 million by 2030 would mean that we would need 8 times the current charging stations to support this massive fleet. And again, this is on the conservative side. My estimation is that the charging stations have to reach above 10 million by 2030 to have a more seamless experience for the users and a more reliable one at that. So we've established that there's a market out there and that there is a big need for this, and a market that will potentially exponentially grow in the coming 10 to 20 years. And it's a market that is expected to reach $28 billion in 2027 from its current level of $2.5 billion. At the extreme side, some market analysts actually put the market size for the charging stations somewhere around $150 to $190 billion. by the year 2030. Let's look into the players in this segment. We know of Tesla already. They've done a lot of rollout into this, but in this segment we will be focusing more into the more pure play players into this segment. As the industry is still in its infancy, it's very difficult to find good and reliable data of the market size and the player size. But here we're looking at the US Department of Energy from 2018, where they are sizing up the different players in the market. We can see that Tesla is having a good market share when it comes to DC fast charging, and they also have a good chunk of the market share when it comes to level. And then we have the two players that we will be looking in today. It's Blink Network and ChargePoint. Blink has a market share of 4% when it comes to DC charging and 8% for level 2, whilst ChargePoint has 15% on the DC charging and 37% when it comes to level 2. Two companies are very interesting because they are one of the few companies that will go or have already gone public. Blink went public during 2020, and then ChargePoint will go public in 2021 via the SPAC, the SEB, the switchback SPAC in February. There's many other players that went public in the past years, but these two players are more interesting because they have a good market share, and by now we also know that the EV market is starting to be well established, and their introduction to the public market is then becoming more interesting. Blink, for example, has had a very good run since their introduction. They ran up by 1,750% since their introduction, reaching a market cap of $1.38 billion. ChargePoint, on the other hand, which is still not public, but have generated through their SPAC with Switchback a market cap of $1.57 billion. And considering the fact that SPE only represents just above 10% of the complete ChargePoint outstanding shares, we can easily extrapolate that ChargePoint will have a valuation of above $12 billion. And I believe that this is a fair valuation considering the fact that ChargePoint is much larger than Blink when it comes to market share. And I'm quite sure that this is what we will see in February when the SPAC is closed. We'll most likely see a valuation of ChargePoint on around $12 billion. Finally, let's move over to the stock price. Is it a fair value to have these stock prices for both these companies? As of December 31st, Blink Charging has a valuation of $42.75, and the SPE SPAC for ChargePoint is just above $40. Is it a fair price to have for these companies? I think for Blink, the price is extremely high. They should have a valuation, according to my high-level calculations, considering the fact that we don't have a lot of the metrics when it comes to PE ratio, etc. I would put them on around $15 to maximum $20. ChargePoint, or through their SPE SPAC, is also very highly valuated at the moment. I think their price should be around $25 to $30. But again, people are buying these companies for the future potential of this market. As we mentioned earlier, there are different estimations on this. Some estimate the market to be around $28 billion 8 to 10 years from now. Other analysts puts it above $100 billion. So based on this, I would say that these type of stocks are highly speculative. Myself, I would not buy at these levels. I have bought some SPE shares which I am keeping, and I will keep them through the merger that will be in the SPAC merger that will come up in February. So I'll keep those in my portfolio, but I bought a bit earlier than the current price levels that we see right now. This is by no means for me to advise you in buying or selling this stock. I'm just laying out the facts as I see them, and I'm telling you what I'm going to do with these stocks. Having said that, I'm generally bullish when it comes to the EV market in general, especially when it comes to the cars, but also to the charging station market. Again, I encourage you to do your own due diligence, read on your own information, and let's share any good information you guys have when it comes to these type of companies and to this market specifically. Thank you guys for listening. We really appreciate if you give us a thumbs up. These videos take quite a long time to produce, so appreciate it if you press that like button. Do consider to subscribe for more content and share this with your friends and family. Until next time, keep safe and take care.